Good evening and welcome to AROBS' very first Investor Day or Capital Markets Day, as we also like to call it. Today we are in Cluj-Napoca together with the whole management team of AROBS, and we have a full evening of presentations prepared for our investors and our future investors regarding the journey of AROBS, how did we get to the main market, the evolution on the ARO, the accomplishments of the last 2 years, as well as what the future holds. Because since the transfer to the main market, which happened, it's been almost 1 month. We've been discussing very much about our plans for the next 2 to 3 years. What does it mean for the investors, and what are the opportunities for you as investors, of course, to become a shareholder in AROBS, and what are our plans? My name is Zuzana Kurek, and I'm Investor Relations Manager at AROBS. Today I will be your moderator. The event, as I mentioned, is streamed live, and it's going to be in English. So even though we're here in a room full of locals, I would say we're speaking in English because as you surely know from our past discussions, we have a very big focus on international institutional investors, as well as we have analysts who cover us, and we want to make sure that the information reaches everybody. I don't want to prolong the intro from my side. What I just want to mention is that you can put questions during the presentations. Whichever platform you are watching us on, you can type the questions in the comment section. We're going to address them during the Q&A. As well as, if it's the case, if there are particular questions for persons who are presenting today, we can also address them after individual presentations. We're gonna start first with the presentation from Wojciech Opran, the founder, CEO, and president of the board of directors at AROBS, who's gonna present the journey of AROBS from ARO to the main market. We are reaching 2 years since closing the private placement, and almost 2 years since listing on the ARO market, and there's been a lot of milestones that I'm sure Wojciech will cover in his presentation.
Yes, so bună ziua tuturor. I will switch to English immediately, but you know, we are a Romanian company and we are proud of this, of course, and I would like to present in few minutes, you know, the journey from ARO to the main market of the stock exchange. So how we are today? We are, I would say, leading software service and software products provider. Also, we have 11 local subsidiaries and places where our people work, and of course, with this hybrid work, it's much more. We work in many other locations, but we have 11 entities, I guess, registered. And we have also 9 international branches that we would like to extend further. For now, we have 1,200 people, 1,200 employees, and also we do work with contractors and collaborators that we all contributes to the success of the company. We have 70 plus partners for software services in different business lines, from the automotive up to clinical trials and media. We also have more than 11,000 customers in products with business lines in 4 countries. Those are the locations where we are. I would underline one, I guess, Poland, which is the acquisition that we did at the beginning of this year, where we have a strong team in Gdańsk, where we want to grow further and to expand local, because also Poland, like Romania, it's one of the key area in software services area, but also in products. And also Republic of Moldova, where we have more than 100 people since we started our presence in Moldavia. All the others are mostly, I would say, more or less sales or some small teams where we have presence. What we do, and maybe sometimes it's a little bit confusing for our investors. We cover two areas, product and services. They are, it's like, going on two legs. We have products and where we have intellectual property, where we do have also, we can control tighter the customer, and where we have, as I mentioned, 11,000 customer plus, most of them in Romania. And you will see the companies in the products area, where we have a few of the acquisition that we did in Hungary, few in Romania, I guess also few, and under different names. Also, we have greenfield in the product, which is AROBS Etoll solution, which is a solution where we invest development for development, and we'll expand it further. But now it's in the infancy, I would say. For service, we have, of course, the main company, AROBS Transylvania Software, and we did a few acquisitions in the past. I will start with Berg, and then continue with Enea, former Enea Services, which is now AROBS Engineering in Bucharest. Then also NordLogic, and Future Workforce. So those are the transactions that we did lately, which are really important. Of course, Poland and all the others, Moldavia. So those are all the area of services where what we deliver, it's actually service. We provide service for various companies. As I said, more than 70 customers that use our services, but they are not, and I would like to clarify this from the beginning, we are not renting people or selling hours. We are more into the core of the customer, and where we also provide the consultancy, R&D, and we are a real partner of our customers, where we act more like an R&D center. And here Aurelian will continue later and explain a little bit more if there is an interest, and of course we can go and get questions from you. Okay, what are the reasons of being product and service company? I put here some of them. One is risk, the other is financial stability. We balance cash on the other side. We have a good customer retention. They are different on each vertical in the service and in the product. And also we are able through mostly services to get more from the innovation side. So we can get ideas, we can implement different innovation projects and R&D in order to increase our presence in certain areas. So those are the elements. And I would like also to not forget AROBS Systems, which is our special area where we develop the hardware and software solution for public entities. So AROBS System, we decided to keep it separate because of course it's a key element for us. But it is important to be kept separate because it's more effective. That's what we consider as a company. It's not included under the whole group. So a few milestones that we completed in 2021 compared with what we are doing today. So in 2 years, we have the turnover of 182 million. And the journey was in 2022, which was an interesting year, I would say. We were able to increase to almost 300 million, and then to estimate it for 2023 is to close it with 422 million lei. What we are able to achieve, I would underline specifically the stock options plan that we started to implement in 2021 in order to increase mostly retention and involvement of our colleagues in order to do the extra mile. We say it like this. In order to be successful, we also need to involve all of us, and not only the management, but also the people, to do the extra mile for the customer. And our increase in the turnover proved that we are doing that, because usually a customer that it's served good is the one who's giving more work. So I would, in 2022, we completely, we were recognized as a continental for the engineering service global supplier, as supplier of the year, which is after 10 years of cooperation. It's a big achievement, because we competed with about 1,500 companies that were all in the supplier list. Out of it, we represent a big chunk. So they recognize our contribution to their top and bottom results. Also, we are one of the company as Deloitte Best Managed Companies, and I would like to thank all the management and the board for all of this, because that was a good achievement. So in 2023. We did 5 acquisitions, AROBS Polska, AROBS Software, AROBS Track GPS, Future Workforce, and AROBS Pannonia. So all of these are part of the group of the companies. We mentioned that into the prospect when we went to IRO, and we were able to complete in 2023. We are also, we implemented the IFRS, and I will let Bogdan later on to express this. We implement the IFRS, which was a mandatory milestone for moving to the main market. Objectives, future objectives are to get to indexes, to market indexes, and we are now into in 2, I guess, Morgan Stanley index for small cap companies, and there is one more that I don't specifically remember. And here I would continue that, you see, that's BET-IRO, that's the other index. It's good to have the presentation in front of you. And well, here I would like to also to emphasize that we got coverage already from two companies. One which is international, which is Wood, regional company in Eastern Europe, and Bereka, which was the company that helped us to migrate from a private company to a public company in IRO. Now, for talking about achievement, we are the largest Romanian tech company listed on Bucharest Stock Exchange, and that was included also in the BET index. And if I remember well, we were about 30% of that index when we started. Yeah. So what's next? Because that's usually the question in front of investor. What's next and why you should be together with us is M&As, continual growing in the organic. And the third one is continue the greenfield investment and to foster the innovation and implement innovation in various areas. So, of course, this cannot be done without good talent, and talent acquisition is a key element in our strategy. Also, because we are a public company, financial health, it's also important, and I guess it's also important for investors. Market share on some verticals, but that's more a business objective. Diversification for us, it's also important because there are some verticals that are growing on different speed. So far, I guess we were able to hedge those growth or decrease in various industries, and you see the results. Also, we have a long-term focus and a revenue growth focus that is it is really important to be mentioned. So, what we promised at the migration to the main market was mostly we mentioned our objective to set a budget of approximately 55 million for further M&A transaction with the focus on outside of Central European region but also local. So we can continue with the acquisition, consolidation of the market, and integration of various companies. Later on, my colleague will be also here, Gabriela, who's in charge with mostly the integration processes and all what will happen in AROBS and will continue the future with the future explanation, with the further explanation. Our target deals, mostly because we try to set some milestones, are 75% cash and 25% shares. And that's what we target in most of the M&A transaction. And we estimate about 40 million cash component for future capital increase with cash contribution paired with 15 million to be paid in AROBS shares. So those are the 55 million, and we estimate those for the next 3 years. So it's not a big number if you consider what we did in the last 2 years, where we made the transaction maybe 27 to 28 million euro in the last 2 years, being on Aero and using the funds from investors and also money from banks and so far without bonds. So we didn't issue bonds. We have all the instruments now being on the major element in the major stock exchange, and we are planning to use this, and Bogdan will elaborate a little bit more. So for me, that was the introduction. I will try to involve further because AROBS is not about me. Mostly, it's also about the people and about the people that are helping us as a company to grow further. And I will introduce Bogdan. No, Susanna, for I'm doing the work, your work. So Bogdan.
Thank you, Voicu. Good evening, everybody. For those who doesn't know me, I am Bogdan Ciungra, the group CFO of AROBS. Okay, I will start my presentation with the 2022 IFRS results. This year we prepared the IFRS financial results for the last 2 years, 21-22. And according to IFRS, our turnover increased by 61% to almost 300 million RON at the end of 2022. The biggest contributor to the turnover was the software services segment, which brought about 80% of the total turnover, and also having a significant increase compared with 2021 of about 87%. The second contributor to our turnover, it was the software product segment, who had about 20% in our total turnover. We also had small revenues still from distribution of goods, which was an activity we discontinued last year. In terms of profitability, the software services brought a gross margin of about 31%, with a plus 72 compared with the previous year. And the software products also had a very good margin, 52%, which is in line with the market standards. Overall profit, operating profit, it was 53%, plus 15% compared with the year before, and with the normalized EBITDA of 67 millions, which was 35% over the past year. What means normalized EBITDA? It's EBITDA less the value of the accounted for the ESOP program. Why we normalize the EBITDA? Because the real cost of acquisition of the shares, it was much lower. It was almost zero. They were acquired from Voicu before the listing at the nominal value. Therefore, in terms of normalizing the performance, we thought it's more valuable and to make the real comparison. Last but not least, the net profit, 47 million, plus 3% compared with with the year before. So we can see the development both for the revenue lines, as I said, plus 87% on software services, plus 20 on the products. Cost of sales following mostly the trends that we see on the revenues, and having also a component in 2022 of the acquisition that we done at the end of 2021 and through the year 2022. So we have two companies that we acquired last year in the second part of the year. It's about former Enea, AROBS Engineering and NordLogic, and we will see this year their full contribution to our performance. As I mentioned, the share of revenues, products and services. Now, if you look at our performance for the first half of the year, first I need to mention that they were prepared according to the statutory standards. Still, we were under the transition period between Aero and the main market, and same standards will apply for the third quarter of this year in terms of reporting. But you will see full IFRS at the end of the year, and from that point on, we will only report under IFRS standards. We try to analyze the contribution of what we called organic business, which is the business we had operating in the first half of 2022. So, and then to isolate the contribution of the companies we acquired starting that moment. And what you can see is that the organic business contribute to the turnover with 66%, while the M&A came with 22% contribution to the turnover, and the third pillar, as Voicu mentioned, the greenfield, which is AROBS System, public sector, and ETOL. They were also having a 12% contribution to the turnover. Overall, the turnover was 241 million, plus 90% compared with the similar period from last year. And looking at the normalized EBITDA generated by each of the three streams, we can see that organic contributed with 31 millions and having an EBITDA margin of 19%. M&A also had 11.6 millions contribution in EBITDA with a 20% margin, while the greenfield it's only with much smaller contribution, it's almost break even. We separated the cost between the salaries and the other operating expenses. The weight in the total payroll cost, it's similar to what we see in the revenues. So if organic contributed to the revenues with 66%, also the weight in the cost, it's 69% in the payroll cost. M&A had 22% contribution on the revenues with 30% contribution to the payroll, while the contribution for the greenfield it's just marginal, because there the costs are coming from a different source. It's about the hardware and software cost for the integrated solutions that we delivered. We arrived to an EBITDA of 43.3 millions and the 17% overall margin, plus 9% compared with last year, and with a net profit of 16.4 millions. Looking at now at the evolution, first of all, the turnover increased by 90%. From the M&A, so M&A out of this 116 millions increase, 51%, half of it's coming from the M&A, another quarter from the greenfield, and the difference from the organic business. The organic business actually grew by 26% compared with the first half of 2022. Normalized EBITDA, yes, on smaller contribution and increase, and I will develop in the next slide the explanations. The landscape for the revenue changed a bit compared with 2022. Now we have 74% contribution from the software services, 14% from the software products, and 12% coming from the greenfield. Okay, about the operating expenses. Of course, the main line, it's the payroll cost. We are having people who are developing solutions, so it's normal to have it as number one line. We have apparently a significant increase, but please remember that also about half of the increase is coming from the newly acquired companies. So it's the payroll cost related to the companies that entered in our portfolio in the second part of last year and beginning of this year. Also, we doubled the number of people overall, so we grew from 643 employees to over 1,200. And also, we felt the pressure on the salary side that was on the market last year. The second cost is related to third parties, to expenses, to subcontractors and partners. The increase is mainly coming from the M&A activity, from the companies that we acquired. On the goods expenses, the jump to 29 million is coming from the integrated system from the public sector business that we developed starting this year. Also, in other operating expenses, you see the effect of some changes we've made in our accounting standards. We tried to bring it much closer to the IFRS. So when we report at the end of the year under IFRS, not to see major differences. So we accounted for the provision for untaken holiday as the middle of the year, which, as you know, the holiday period, it's mainly in the second part of the year, so we have a significant provision. Last year, this was not done because it was fully under statutory standards. Same, we applied the same rules and principles for the provision of receivables. Goodwill increased due to the acquisition we've made. According to the Romanian standards, you recognize the difference between the fair value of the net assets of the company you acquired and the purchase price as goodwill, which we amortized over 10 years. This expense will disappear under IFRS, where you only recognize the intangible assets, and goodwill is recognized only in the balance sheet, and you do at the end of the year an impairment test to see if the value is still there or you need to expense part of the goodwill you recognized. Contribution to EBITDA, I already mentioned 73%. It's coming from the organic, 26% from the M&A. Budget, we have I would say an ambitious budget for this year, 421 million in turnover and a normalized EBITDA of 92 million. How it looks half year, in terms of revenues, we were slightly over. This was coming partially from the M&A activity that we had this year. When we built the budget, we only took into account the companies that were within our group at the end of last year. While in the meantime, we had a few acquisitions that also contribute both in terms of revenue and in terms of expenses, mainly on the payroll cost. That's about the results in short. Thank you.
Perfect. Thank you very much, Bogdan. Now we're going to continue with the presentations, and as Bogdan actually joined AROBS at the beginning of the year, so February 1st, we have another new addition to AROBS team in an area which is extremely important also to investors based on the feedback that we have received so far related to the integration of the M&As that were discussed by Wojku and Bogdan. And I have now next to me Gabriela Ameca with a lot of experience in different local and international IT companies, who took over the role of an integration director. Welcome, Gabriela, and welcome to your very first. I mean, frankly, it's for all of us. It's the first Investor Day, so you're not much behind. So. I would like to invite you to deliver the presentation. I'm sure we will have a lot of follow-on questions also about your future and how you see the integration of the M&As.
Hello, everybody. So I joined AROBS a couple of weeks ago. It's in my position as integration director, and as you've seen from Wojku, it's a lot. There are many companies. There are different profiles of companies: bigger, smaller, product companies, services. So, well, for the beginning, at today's Investor Day, I will present to you some basic principles of what is an integration, what is about, and how what you need to do, and what are the items that you need to check and to be attentive at in order to have a successful integration after an acquisition. So when we are talking about integration, we are talking about value. How to capture the value in the company that you acquired, and of course in time to find the best systems and mechanisms to increase this value. So in what do we measure the value that we acquired? We measure it in products, as you've seen before. In AROBS, there are 8 products in this moment. We are measuring it in markets. AROBS has a global presence, and not only in many countries, but also in many verticals. Very different profile of companies and of partnership and the customers. And of course, in customers, in this moment, AROBS Group has in the product division and in the software division a number of that exceeds 11,000 customers. And as seen before in Wojku's presentation, we are now more than 1,200 people working in AROBS Group. So the group is a very dynamic group, and you can see that during the last 5 years there were 13 deals done, 13 acquisitions, companies. Most of them were acquired in 2022 and 2023, and also the big ones like the Enea service in Bucharest, or AROBS Track GPS, or the companies for future of workforce. So if we want to capture the value in all those companies and to successfully integrate them, we need to see the specificality of each one of them, because each deal is unique, and the value drivers of the deal, the reason why you bought that company must shape the level of integration, the sequence of the integration, and also the pace of the integration. Of course, it's a road with hidden risks, but the biggest two risks is, first of all, to not integrate enough. And in this case, none of the companies will benefit from what the other company have to offer. And also to integrate too much. And if you integrate too much, then you are at the risk to destroy the aspects that made the purchase decision in the first time and the acquisition to be attractive. So there are different types of integration levels. The first two types are basically non-integration options, and the other two are integration options. And the difference between them is given by the degree of autonomy that the acquired company will have after the acquisition. So in the first non-integration option, it is mentorship. Mentorship means that basically the company that you bought will be a standalone entity with none or very, very few interactions with the company that was with the buyer. And this type of integration is suitable when you buy startups or when you buy a company that you want to sell afterwards and you apply a very aggressive policy of cost cutting to make it more efficient and to raise its value and then sell it again. Then we have the model of cooperation. The model of cooperation is more integrative, but also the acquired company has a very high level of autonomy, and the cooperation usually is in some support functions like, I don't know, administrative or HR. And then we have the options that we integrate the company, that we want to work with it. And we have here the targeted integration, which means that we integrate most of the functions, but we do not really touch the ones that are bringing value, the value processes, because we are afraid that we might destroy the exact generators of value for us. And then it is the full integration where at the end of the full integration, both of the companies are working like one. So we have many different types of companies in the group, and for each one of them we need to see which type of integration we will apply, what we are going to do in order to keep and capture the value that we bought. So in order to integrate, we must plan, and we must plan for value creation. As you see, I'm always talking about value because this is what we bought. And the integration, it is very, very important. The integration must begin in the due diligence moment. So poor planning or no planning during the due diligence process was a factor that was present in 75% of the companies that failed to integrate at the end. So what we need to do, we need to start planning early, before the deal is closed. So when the deal is closed, we must identify, we must know what needs to be done. We must set up the functional integrational teams. I will talk about those teams a little bit later. And we will strive to use the teams that will be in charge with integration, to use them in the due diligence process. Because in this, if we do so, and those teams are the teams that are making the analysis of the company that we are going to acquire, we ensure continuity, and more important, we ensure that the information is not lost between the communication in the communication process between the integration team and the due diligence team. And of course, we need to develop a playbook or an integration manual that is designed to streamline and to facilitate the post-close workflows. So when we plan for value creation, we must capitalize on the value driver. And in order to capitalize on the value driver, of course, we must know and be very clear what is the value driver in the company that we are going to acquire. So we need to clarify the sources of value and also the main risks, meaning that we should make let's say a short list of 5 to 10, but not more than 10 items that we need to focus on. Value drivers and also risks. Not too many, of course, during the integration process, many things will pop up, but the main one, the ones that are counting for us. Then we need to start forming the integration teams around the sources of value and the risks. So what we need to do afterwards in order to see what type of integration we are going to have is to determine the nature of the deal. A deal can be of two types, a deal of scope or a deal of scale. The deal of scale is the deal when we buy a company in the same business with us, and we want just to scale up our existing competencies, our existing processes and customers, and to expand our market. The deal of scope, it's an expansion in new markets or with new products. So a deal of scale, it's fit for a full integration, so the companies at the end of the integration process will work as one. The deal of scope, we need to analyze very well in order not to destroy the processes or the services that are bringing us value. Then we need to determine the value-creating processes, which, first of all, the processes that made the company attractive for us, and to ensure that the integration teams will protect these processes, so will not disrupt them. And always make sure that the customer needs are at the top of our priority, are the focus that we have in our minds during the integration process, because it's very, very easy to start changing the processes, and this may impact the relation with our customers. Then we need to determine the value-creating people, so the teams that are creating value in the target company. We need to commit to the culture that we want to have at the end of the integration process. It can be a mixture between our culture and the target company culture, or we want we want the acquired company to fully commit to our culture. And also, we need to create the organizational structure and the decision-making principles that are consistent with the desired culture. Because it's very important to be prepared to welcome a new company. And we must ensure that we have in our house everything that's needed to be able to absorb a new company. And also to design compensation and benefit systems and packages in order to reward the behaviors and the culture that we want to obtain at the end of the integration process. Now it is the way that we work during the integration, how we form the teams. And usually the integration teams should be created on a function-by-function basis. I mean, we need to form the functional teams, operations or HR or sales or technology systems, internal procedures. It depends on what we want to focus during the integration process. Not all the integration or all the companies that we buy will have the same teams, because for some companies you need to take care at sales and at I don't know, informational systems, and others like services companies, you need to be very, very attentive at HR and at operations. So even if we have a basic framework like integration playbook or integration manual, it is impossible to have a template for every aspect and for every deal that we have. So this playbook should be very flexible, and we need to adapt it for each company that we buy. So what we need to do is to take time and understand very well the company that we are buying, and then to update and adapt our integration processes to the company that we bought, to the target company. Of course, after we are forming the integration teams, we must trust them. We must delegate responsibility to them, and we must trust them, and also set milestones of their progress. And milestones are very important after we close a deal, because we need to establish an aggressive timeline, and usually we need to be very attentive, and we need to do as many steps as we can during the first 6 months, because the first 6 months are critical after we buy a company. It is the period where the employees from the target company are expecting changes. Afterwards, it's more difficult to implement changes that affect their way of working or the way they are organized and teams. But during the first 6 months, they are expecting this. They are open, they are collaborative, they understand. So we need to have a plan for 6 months with very, very clear milestones. Thank you.
Not yet, because I have some follow-on questions actually, because your presentation was very interesting on actually the theory, to put it down, because it's a very complex process that lasts. And how is there a timeline? I mean, when the integration takes too short or too long? I mean, could you quantify it?
No, there is no timeline. Some companies can be integrated in a few months, but some companies may take longer, like 2 years.
It's about organizational culture,
It's about the size of the company. Mm-hmm. It's about the fact that the target company is something new for us, mm-hmm. and we need to be very very attentive how we tackle. And we might find during the process some obstacles that we were mm-hmm. not prepared for. Also, it's about the openness of the teams. because an integration, it's very much about cultural changes and change management, after all. So it can take for a few months to maximum 2 years, but usually at the end of those 2 years, if the companies are not integrated in the way that you wish to, because as you've seen, there are several models, then you can easily say that you failed.
And you joined a few weeks ago, so perhaps it's a little bit too, yes, so it's a little bit too early to ask this question, but how do you feel, because your slide, actually, you can see the scale of the M&A from the slide that you have of the transactions, particularly in the last 2 years. For example, the newly acquired companies, 2022, 2023, how did you see which of the stages are these companies in currently, where you will be assisting them also in the integration?
Well, some of the companies are, do not imagine that the companies that were acquired last year or even this year, at the beginning of the year, are fully unintegrated, and I'm coming here to, well, let's integrate everybody. No, there are different levels of integration in terms of processes, of sales, of delivery teams. So what I am doing now, I am taking, let's say, I'm taking company by company and see the level and see what the problems are and what we can do better. Also to set the systems and the teams that will be able to implement processes in the future, of course, to design processes, the integration manual and so on. So now I'm in the phase of analysis.
And also, AROBS did several cross-border M&As. Is the geographical border adding a level of complexity or not necessarily? Because I would say, that's a very interesting aspect, because I would say that in our world of investors and investments, it's considered that it's much easier to do local M&As than to do international M&As. Or at least this is something that we've met as a perception in general when talking about Romanian companies doing acquisitions. And maybe how is it different for an IT company? Because of course, if you have a factory in one country and you want to expand somewhere else, it's something else. Whereas in IT, we're talking a lot about people who can work from everywhere, in fact. It's the greatest advantage.
To be frankly, I believe it's more complicated from the financial and the legal point of view. But as you said, in IT, people are working from everywhere. We have people in the company in Cluj that are working from elsewhere in the country. We are working very well with the teams in Chișinău. Well, it's collaborative. They are working based on projects. And in a project, the team can be from different locations. So I do not believe that from this point of view, it's more complicated. But of course, from an accounting and legal and cost control point of view, it's more challenging.
And one last question. It was very interesting, this slide with the scale and the scope deals. Could you assess AROBS, like from your, let's say, external eye, the transactions that AROBS is doing? Are they like...
Both.
Exactly. So are they 50-50 split? Is it the right, like, what's your take on the strategy?
Well, in AROBS, we have two types of activities. One type is centered on products and one type is centered on services. There are different products. I mean, we have products for fleet management. We have products for payroll and HR. We have also automation tools. So these are different. They are focusing on different markets. So these are scope acquisitions. To enter new products, to enter new market, and to tackle new customer base. Services, also there are different types of services, and it depends on the competencies of the people that are in the target company.
So a mix. So this is in line also with the actually, as we look at the revenue structure, which is, business structure, which is diverse. Also the type of M&As is diverse as well, somehow to complement the expansion.
And there is no recipe.
That's great. That's good to know. Wonderful. Thank you so much, Gabriela. This was very informative. And welcome to AROBS, officially, also now in front of investors. I would like now to invite Aurelian Diaconu and Ovidiu Bojan. We're going to start actually with Aurelian, who, if I'm not mistaken, was missing at our transfer to the Bucharest Stock Exchange main market because your flight got cancelled, unfortunately.
Yes, that's right. For me, I'm happy to be here because at the previous major event of the company that took place a month ago, the airport was shut down because of the storm, so I was not able to land and then to go back to Bucharest. So I'm happy to be here, and I'm happy to put some emphasis on some details, relevant details about us.
Yes, so great to have you, Aurelian. We are going to talk a little bit, you have a few slides prepared on the software component, so software services, charting the course forward. Aurelian is Executive Director, Software Services Division, and a board member at AROBS. And I think best way to go through the slides, I also have few follow-on questions for you already we received. So we can do also a little bit of Q&A.
Sure.
And of course, maybe I did not articulate it enough. Of course, the audience is also very much welcome to put questions if you have at this stage, because the fireside chat we will have with Voicu and Bogdan on the business and the financial section. But if you have any questions, particularly about the software and the product division about which we're going to talk in a bit, you're more than welcome to request also the microphone. So,
of course, thanks for the introduction, first of all. It is my understanding that this presentation should be brief. As you're going to see, a lot of information that are presented here are already available on our website or presented by our former or previous presenters. I would like to emphasize a few of them. As you can see, European by birth, international by culture mean that we are going to, of course, expand this, especially in Romania. And previously we expand especially in Romania, but not only to Romania. And we are going to develop our presence in order to access talents, especially in the region. So main focus for us in order to access talents is going to be in the region. We are looking for new green fields. This is to say, opening our own offices from zero in various locations. Two good examples here are Moldova, Chișinău, and Budapest. And also, it is entirely possible that in the future we are going to access new talents via acquisition in the region. Simply because we are doing this, simply because we are trying to dissipate the pressure, especially on the recruitment side, on as many locations as possible. Obviously, in Romania, we are present especially during or around the main university cities, but as of today, with this kind of remote working, we are present anywhere. We are people distributed, I would say, uniform across the entire country. And again, in a short presentation, it's difficult to emphasize all the elements that I would like, but I would like to give you a few elements, important elements. So in terms of the software services, we are an organization built around the business verticals. And here we have listed fewer of our key expertise for various industries. And I expect that you as investors are interested more regarding the future. And I would like to hint to maybe two new developments that we are looking for. One is the cybersecurity, which we can see it integrated in our services, but we can see it as well developed as an independent kind of business line. And this is a very rapid growth for us for the cybersecurity. We have a growth for the past 2 years in the space of 300%. Of course, we will be very happy to report the same growth for the next years. But again, this is one of our business lines that we are going to invest a lot of focus for the next years. Another industry that we want to invest our energy in the future years is the life science, where we can see, especially on the medical devices, a lot of potential growth, where we had acquired recently a new client for the medical devices, and we truly see a potential for further increases. Now, in terms of the main technologies, I'm sure you're not that interested about. We are covering all the main technologies that are present on the market as of today. Speaking about our new colleagues that we have welcomed them, let's say, in this graphic, in this timeline, it's present only from 2021. There were many others before, but let's focus on this one. I'm not going to enter into many details regarding all the competencies that we have welcomed on board with the acquisition of this company, but I'm happy to report to you all that even without a dedicated person for integration, all those companies that we acquire are on the uptrend that it's solid and it's quite substantial. So this is, I think, an important topic. Now, regarding the integration, Gabriela had mentioned in a great detail what our, kind of approach to a kind of approaches that we have for integration. As of today, the focus, and in the previous years, the focus was on integration in terms of finding the synergies, expanding the possibility of sales, cross-sales and upscales between the companies and between the customers of each companies, and we have managed to do that. And of course, to expand the capabilities for each of the company in terms of what kind of market are they specialized in, and restructure them based on the business verticals. Come again to what I have said previously, that we are a strong believer on business verticals. The road to success, this is mostly a slide that we have prepared for our internal presentation. It's never a straightforward line. It's always with a lot of challenges during the process. As of today, we have a lot of challenges, of course, and I'm sure we are going to have a lot of them in the years to come. Now, again, I would like to leave you with a few key elements about us, few key elements about what we do. It is very important for you as investors to understand that vast majority of our clients are long-term clients. In vast majority of cases, we have clients that are with us for more than 5 years, and this speaks for itself. We have clients that are with us for more than 10 years by now. And this is a very important element. This speaks loudly and clear about what we do, how we deliver, and the quality of what we do, and the seriousness about what we are aimed to deliver day by day. By now, of course, you understand very clearly that our focus is on business verticals, and this is one of our key strategy to acquire as much as possible expertise in those business verticals, and then to expand to other markets. Another important element that I'm sure it's important for you, and I would like to emphasize, it's that from not from very many years ago, by now we have a strong sales force ourselves in key markets that we are aiming to expand. And this is an important element that it's somehow complementary with the sales partner network that we have. And this is, again, for us, a very important element in the acquisition of the projects that we will welcome in the future. Of course, we are compliant with a lot of industry standards. That it's another element that distinguishes us from our competitors. But this is not something that I'm going to insist too much. And a very important element, because this will affect in the years to come, I suspect, in one way or the other, the financial results. This is a tough market. We are going to compete with a lot of strong companies coming from various geographies, such as India. So it's very important for us to be competitive as a price. And that's a very important element to understand, that in terms of the pricing, we are not going to shoot for the higher range of the prices. We are going to shoot in a range of very competitive price model. So this means that we have to be very competitive in terms of cost as well. That's why we are aiming to be very heavily invested around the university centers in order to grow our workforce, so much so that we can keep our competitiveness in terms of the cost. So those are a few elements that I thought that would be of great interest for you. There are many more, but if there are some questions, I'm happy to address them.
If we have any questions from the room, we actually have a question from the audience.
Life science.
Please tell us how much of your current services are representing these services for now, because I suppose you have something there. And what is your target? And especially if you have some market data for Romania, or let's say cybersecurity, because I think this is more important, in my opinion. I don't know for sure.
Mm-hmm. Thanks for the questions, first of all. In terms of the cybersecurity, there are two main dimensions. One is the cybersecurity that it's incorporated during the software development cycle. That's one topic. And another topic is the cybersecurity as a service, I would say. Maybe it's not the most orthodox way of describing it. Selling as a service, right? You sell the service of cybersecurity. I'm speaking mostly about this one. So this one is growing very fast. For us as a discipline, as an internal vertical, it's not more than 3 to 4 years, to be honest. But it's growing very fast. So we aim now to sell this kind of services to new clients, including the clients from other business verticals that most surely we're going to have the need for that, but also to the clients from the company that we have acquired. Now, in terms of the life science and in terms of the market data, life science has, again, inside of this business vertical, there are multiple dimensions. Medical devices is one of them. I hinted to this one. This one is growing quite fast, and I think it's going to be a very important one. In terms of how much it represents from the total revenues of the software services, I would aim to say that it's around 10% plus, right? And keep growing. Maybe it's important to emphasize here that the core, the business core, the core, the one that the initial company, we have grew year over year with 33%. So this is important. So inside of the company that it's constantly growing, it's hard to say how much is going to be a market share of a particular business vertical. So we aim that each business vertical has a double-digit growth year over year. But again, it's according with the market environment, with the macroeconomics, with the geopolitics, and so on and so forth. As of today, we see people are much more conservative in terms of the budget because of the skepticism in the market and so on and so forth. But we are optimists, and we aim to grow with the double-digit year over year for every and each business vertical.
I suppose including acquisitions.
Yes, of course. And also for the companies that were acquired, the new business verticals, so to say, they have the same goal of keeping a growth, a constant growth, a solid growth year over year with 20% plus, let's say, a double-digit one.
Yeah, but given this fast development, I suppose you are expecting that the gross margin will decrease going forward.
Well, in terms of the
Salary pressures.
Well, in terms of the gross margin, there are multiple elements that affect the gross margin. We have crossed a few months of turbulences, let's say like that. We have prepared for a continuous growth, and the market, not only for AROBS, but for the entire IT market and across the globe, it's the same, across the world is the same trend, had cooled down. That's a fact. That's not only for AROBS, it's for the entire industry. Now, without the same utilization rate, of course, the gross margin is going to be affected. Now, another element that it's impacting our result, it's of course the salary pressure. The salary pressure was, absurd in any case, for in many cases. So it was very, very difficult to keep the pace with the salary demands and to move that, increases to the price structure that you offer to your client. It's very, very difficult. So you have to find solution. And luckily enough, I would say, luckily with a bit of smile, we found solution. But as of today, I think this cooling of the general market, I think it's going to help us also in cooling down the salary pressure. I hope so.
Great. Actually, Daniela already addressed some of the questions that I also had. So thank you for very good points. I wanted to actually ask about the indication of the decrease of the demand in the IT services, and how do you approach this? I mean, in the day-to-day business, because in the market that is slowing down, do you have more flexible teams that can be reallocated, or how is your approach towards this potential challenge?
First of all, I would like to leave you with a very important element. We have grown year over year for the first semester with 33%. This is absolutely amazing for this market, and this is very important to be emphasized. Now, secondly, I spent almost a week in the United States last week for various conversations with various customers. I think above everything, it's a sort of skepticism in terms of the budget, I would say. Everybody is expecting, I would bet that this is the most expected recession in the history of humankind. So far, it's nowhere to be seen. I mean, there are still, the automotive sector is reporting that it's producing, in Europe at least, 1 million cars above the previous year. So the indications are not the hard data, they are not so bad. So I think as soon as this, shade of skepticism will fade away, I suspect that things will get better. Now, I'm happy to report that we have not been affected severely by this kind of skepticism. But in terms of the growth, because that was part of your question, I'm a bit prudent, so to say. I think this year will going to be quite good in terms of the numbers that we are able to expose, but next year is to be determined. I'm not saying here that it's going to be good or bad. I'm saying that it depends on the general market. I mean, we are ready to deliver. We know how to do it, and we know what to do it. And vast majority of our customers, maybe this is important to share as well, had the committed budget for the next year with us. So I think we are going to be in a very stable phase. But in terms of the growth, obviously it's going to depend about the market condition. That's absolutely sure.
And a lot of, we also have this question that keeps popping up quite regularly in the questions that we receive from investors, is related to the impact of the artificial intelligence on AROBS as a company as such, and of course, I would say particularly on the services division. And how would you answer that? How do you see Yes, I mean 2023 is the year of ChatGPT without a doubt, and of course it's also on the mind of investors. And what is the impact of that on IT companies?
I think for this subject alone we will need 2 hours. We are starting to have more and more conversation with our clients regarding the implementation of artificial intelligence, of machine learning, and so on and so forth. But let's remember, in what we do, it's a customer-driven process. Now, what depends on us, it's about learning and be prepared to offer this kind of services and this kind of knowledge. And on this topic, I'm happy to report that we have made important step forward, learning and assimilating new tools and new way of doing it. But I'm really, really thinking that this artificial intelligence transformation is just at the beginning. We are ready to be part of that. We are aiming to be part of that, but it's at the beginning of the process. Also, I would like to emphasize that we have a company in group, Future Workforce, that it's maybe the most advanced one on this artificial intelligence, simply because they implement a lot of automatization processes. So for this kind of robot process automation, you can implement artificial intelligence during that process, the acquisition of the data and likes, much more easy, much more naturally, so to say. So I think for the years to come, we are going to welcome a lot of projects with artificial intelligence, but so far, many of the discussions are just at the beginning of the, are we going to commit budget? Are we going to commit, energy to develop this kind of artificial intelligence for the kind of product that we have? Think about life science. Artificial intelligence can help a lot with that one. Mm-hmm. But somebody should come with a budget committed for that one. So again, this will depend about the evolution on the market, I would expect.
And the last question related to the presentation that comes up from Ovidiu. You talked a little bit about the synergies with the companies that are newly acquired and integrated to the group, but I think it's also an interesting question from investors in general, if the synergies also exist at the level of the two divisions, of the product and services, or if you collaborate, how does it work in practice actually?
Well, again, thanks for the question. Ovidiu will most likely have something to say about this as well. Not only we collaborate, but we exchange a lot of knowledge from one side to the other side. I think from our side, because we are working in much more advanced kind of projects, we can transfer knowledge to the product side. And from the product side, we have learned the pressure to time to market kind of thing, how to do it more efficiently, more faster, time to market to be as short as possible. So yes, we are collaborating on various levels, on multiple dimensions of this kind of collaboration. I can dive into many details about what we do together, including the training session that are made for the entire crew regarding, irrespective of which division is working products or services. But I think, and this is one of my main key selling point to our customer, is that this company is really mixing services and products, and it's really, really mixing services and products. And this is also for tougher times. You can use competencies that you acquire during the software services side and move to the product side, and vice versa could be. As of today, we have a conversation with an important, airport of the world, where we are most likely be in the front of the conversation, but our colleagues are going to provide the on-time routing and on-time, real-time positioning on the tarmac and so on and so forth. So here you have it. We can have a lot of opportunities and a lot of synergies inside of the company. Mm-hmm. But it's an ongoing process. It's nothing comes easy. But we are really aiming forward to discover them and to create value out of them for the benefit of our customers and our investors, of course.
This is great. I had one of the questions related to, key advantages for the client, but I think you outlined it perfectly on the slide and just now. So somehow this mix of product and service, the great skill set, what Wojciech mentioned about people going the extra mile, being motivated, be it, of course, by by the work environment, but of course also by the stock option plan that I think is a great motivation. And I think this translates to the loyalty that you mentioned, that I think for investors is one of the greatest indicators of predictability, looking forward for and stability also of the business.
Well, you just raised an important topic, and I will capture that one. It's loyalty also on the team side. Let's not forget that inside of our team, although the average age is quite young, towards 30s, vast majority of the people are staying with us 5 years plus. Mm-hmm. So this speaks for itself. You're not coming to AROBS only for money. You're coming for finding a good environment. You're coming for acquiring skills and integrated inside of within a success story. Because as of today, let's not forget that the core had grown with more than 1,000% over the last decade. So 1,000%, that's not something easy. So this is important. So we aim to go for the same, to shoot for the same star, but it's going to be difficult, but we are ready and we are committed to do our best to deliver alike results.
This is wonderful. Thank you so much, Aurelian. It was
Thank
a
you.
pleasure to discuss with you and to have you in front of our investors. And now we are moving to the product side and specific to one very specific product, which is the flagship of AROBS, Track GPS.
I hope so.
Definitely. This is the first one that we always mention in all the reports.
Yeah, I just want to add something extra to what Aurelian said. Before entering in this panel, he was asking me for how long you are in this company. And I said, already 13 years. So it's another proof that you can grow here and you can build here together with us your career. So, but I think also, Aurelian, you have 12 years. So almost 12. Yeah, so my name is Ovidiu Bojan. I'm representing, what we are calling the flagship of the products. The Track GPS is the brand name, but I'm talking in general about fleet management and telematic services. In order to understand what we are doing, I'm going to deep down into some details. We are present in 5 countries. Servicing directly our customer. We are servicing 3 platforms, more than 115,000 vehicles under management in total, and servicing 11,000 customers. So it's a huge pressure on us on how fast you go on the market, like Aurelian mentioned, and to be able to respond to the customer to each of the customer in time. During 17 years of fleet management services, we develop a lot of competencies. So a lot of what we are calling 4 areas of expertise. First of them, it's we are present on the vehicle service side. We developed our own telematic platform. That means we are a telematic software provider, but also we are providing services, so we are also a service provider. Together with our partners, we developed the in-vehicle Wi-Fi solution, and of course, because we are handling GPS systems, we know a lot of about traffic, so we have a lot of competence in traffic information systems. The second area is what we are calling vehicle data and analytics. We know how to collect data, CAN data or OBD data. We know how to collect data about the driving style and remote diagnostic services. The third area of expertise is what we are calling mobility services. We already deployed the car sharing solution, carpooling solution, and later this year we enter on the what we are calling micro mobility services. We have projects for e-bikes, or in Asia we have projects for motorcycles. And the last area we are calling usage-based charging solution. It was mentioned about the investment that we are doing in AROBS et al. Solution. Not only with based on what we are installing, the black box we are installing on our systems, on our customers, but also with other third-party solutions. So it's quite a large environment. So the question is how to innovate, because we were talking about innovation. How do we innovate in such a large environment? So it is necessary to have and to define very good principles on innovation. So first of all, we are looking for scalability, because it's one thing to handle and to track, I don't know, 100 vehicles, and another thing is to provide services for 100,000 or 1 million vehicles. The other principle, we are all part of mobility services. So we are developing service around the services and solutions around mobility. We are generating data, we are connecting data with the systems, so we have to, our system should be prepared to exchange seamless data. Of course, it's important for us not to offer only a solution just for, I don't know, international transportation. It's important to cover as many industries is possible. For example, to have, I don't know, also solution for construction or for heavy machinery or for pharmaceutical industry, not only for transportation. And like it was mentioned also, we are always focused on faster development to be on the market as fast as is possible. How long you can innovate? So, because what we are thinking is connecting vehicles is the new feature. Connected vehicles right now it's just a nice to have solution. Is it going to become a must have solution? And our answer is yes. And there are some reasons why we are saying this. Because first of all, because of legislation, because we are living in European Union and we have very strict rules, and we'll have more strict rules regarding CO2 emission. Also, international transportation industry is one of the most regulated industry. Another reason why we are saying that the connected vehicles will become a must-have solution is because of the cost. We all know and see that the cost of the human resource is increasing, the cost of the fuel is increasing, and everybody wants to see in their system and to see their cost. The visibility, more and more of our customers are requiring to know where, what the fleet manager is doing, what the people are doing, when a package or when a truck will arrive. And of course, all the companies needs predictability. So in terms, at least for what's the total cost of ownership. What's for us tomorrow? And this is very important because all our development or our innovation should be done with a very clear image on what's going to be tomorrow for us. Track GPS and fleet management solution are becoming a data, I'm calling it generic data company, because we are collecting data, we store and analyze data and provide data services to our client and data information. We consider that we are already a key player on digital transformation and will be a key player on digital transformation. For example, you cannot say that you have an ESG standard or even to get a certification we have unless you have all the fleet connected. Like I mentioned before, connectivity demands in between all the systems, like, I don't know, fleet management system with the ERP system, or telematic system together with transport management system or HR solutions. And we see for not only for fleet management system, but also for others, that the customers are looking more and more onto OPEX more than the CAPEX, and we consider that we will become a solution, as we are calling ourselves a solution as a service. I mentioned before that we are a key part of digital transformation. It's a hot topic right now, the digital transformation. As I mentioned, there is a real need about, regarding real-time data synchronization. And I mentioned all the, we have also integration in between HR systems on the project together with our colleagues, and HR system and the telematic system. More and more, the customers are looking for tools to provide customer engagement. So to have, I don't know, mobile application, we have projects, and we are building projects for estimation time of arrival for public transportation system, for example. As I mentioned before, the digital transformation in this area means that we will have the same experience on mobile or on the website. We will have on the same platform all the assets or all the drivers or all the vehicles in the system. And what's new also, it's about to have in the same platform electric and thermal engine, thermal combustion vehicles. And of course, it's a hot topic, the AI and predictive analytics. We are already working with our partners, especially for predictive maintenance. This is the first step in the industry, predictive maintenance for vehicle fleets. Of course, everything built around the customer needs. We cannot talk about innovation if you are not talking about sustainable innovation and sustainable growth. We consider that fleet management, the track GPS, provides a tool for enhanced efficiency within the organization. We have a responsibility, and we consider that we have a responsibility to promote responsible resource management. Also, a very hot topic is in regard to reduce all the environmental impact and all the legislation, European legislation that we have to adopt. And do not forget that we are working, as I mentioned, with data, and we have to be compliant with all these GDPR standards. It's nothing that you can see outside, but we have a very we are very responsible. We invest a lot in developing all these GDPR standards. The customers are trusting us. They are putting their data on our platform. So we are investing a lot on this area also. I will come back again to these 5 countries, 3 platforms, 150,000 vehicles, 11,000 customers, and I will add another 2 dimensions. First of all, that we are monitoring over 290 million kilometers per month. So our systems are working like hell. We have millions and millions of data every second. And this is the next step. We can see that our customers are generating more than 80,000 tons of CO2 per month. So for us, the green transition, I think it offers a lot of opportunity, because connected vehicles will become a must-have. Electric vehicles integration will offer us the opportunity to develop new services. Of course, the carbon footprint, as I mentioned before, we're already trying to monitor, and it will be become a standard in industry. So this is it for the innovation in the track GPS.
Thank you, Ovidiu. Before we take questions from the audience, I wanted the word telematics came twice or even three times in your presentation, and for I would say for an average person, it's a more new term. Can you elaborate a little bit, because I think it will become integral to your division in the future, and it would be important also to explain to investors what exactly it entails, this mix of technology and information.
Maybe you heard about telematics and fleet management. I'm considering there are two different type of services. Telematics is everything related with GPS coordinate. So it should have a device, a GPS device, and should transmit X and Y, and to be able to locate the vehicle or an asset or a person on the certain area, on the certain map. The fleet management area, it's much more diverse. It's around the customer business processes, internal processes, and we can talk about here about maintenance, we can talk about insurance, we can talk about managing his internal processes, I don't know, service repairing, or so here are these are two different. Telematics is something related with X and Y, and the GPS position. The fleet management is a total complex of the solution.
Great, and we actually have a question from one of our analysts. You had a slide presented with 115,000 connected vehicles, and his question is, how is these vehicles split between light vehicles, so this is the personal vehicles, and heavy trucks or commercial road transport in general, as a percent?
First of all, we are not providing services for private persons, for people. So we are addressing only business to business. So they are all on company vehicles. The second, the split, it's depending on the country. So if you are talking about, I don't know, Asia, we have half of them are transportation, and half of them are passenger cars. In Romania, we have quite a diverse, because we are covering also light vehicles, and it's important also, this segment is very important for us, not only international transportation. Let's say, I don't know, 15% international transportation, 25%, but something like this.
Mm-hmm. And between the type of vehicle, could you split it generalized between, at the level of this whole amount of 115, how many? Because you mentioned in Asia it's more or less half-half.
I mean heavy trucks.
Yes.
And passenger cars.
Yes.
And I told in Romania we have like a 15% heavy trucks, more than 20%, 25% maybe on the light vehicles, and after that passenger cars.
Great. Do we have any questions from again, we have a question from Daniela. We have a microphone, so also.
About connected vehicles.
Yeah.
For my understanding, to be sure, you are referring to the fleet management, yes?
Connected vehicles is every vehicle which has a connectivity with us. Either we put a device to capture the data and to analyze the data, or right now the industry it's vehicle data, connected vehicle data. So you address to a third party or to the manufacturer in order to collect the data. So that's why we are calling connected, because there is a bridge in between vehicle and our system. And we are using, right now we are using a third party, like a mobile network operator, in order to transport the data. So we are using like SIM cards, you know, and we connect the FM unit, the fleet management unit, and data transmitted through the operator to our systems.
And
That's why we are calling connected, because we have a connection.
Yeah, because for me, I don't know, fleet management, track GPS,
Yeah.
for me it's the same.
Track GPS is the brand, just the GPS is the brand. Telematic services is around the X and Y, and fleet management is around the business.
And if you turn with the page with the number of clients and number of vehicles, you can observe by making a simple average that your customers
Ah.
small fleets.
Depends, yeah, depends.
Make the average.
Yeah, our biggest customer, I cannot tell the name, but I think it's 1,500 units. So we are both on small enterprises. They have, I don't know, maybe like, I don't know, an IT company with 1,200 people, but they have only 5 vehicles. So it's, yeah,
An observation. So
yeah.
the customers have more small fleets, they are not bigger, large transporters.
We have a lot of big transport, international, and yes, also 500, 600. You're welcome.
Great. Do we have other questions from the audience? No? And then I have one more question. So we're talking about innovation because that is an integral part also of your presentation. How do you prioritize between investing in new products and then enhancing and maintaining the existing products? I mean, is there a sweet spot?
Enhancing and developing is a continuous innovation process. So we are always looking for the new technologies in order to implement in the platform. Developing the new services, it's coming especially by working with our customers. So we have a lot of, let's say, very important customers. They are trying to, they are pushing us, yeah, this is the term, they are pushing us to innovate and to develop the new services.
So actually they are all customer-centric because
not
they're
all
also...
of them.
Yeah.
For example, like I mentioned the GDPR, it was a huge investment and a change in entire infrastructure. So this was a legislation pressure. So somehow you have to adapt. Either it's coming from or for example, the changing from 2G to 4G or the 5G. So this is again a regulation coming from European Union. So we have to switch our services from 2G to 4G and the next for 5G. So that comes with a lot of pressure on developing new ways of connecting vehicles or the mix what we are seeing now in between electrical and thermal, because the electrical capturing the data for electrical vehicles is totally different than capturing the data for a classic vehicle. So yeah, sometimes we go with the legislation, sometimes by the customer.
Perfect. Thank you very much.
You're welcome.
There is one more question from...
We have 11,000 monthly invoices. Yeah. It's a pay per month per vehicle. And okay, there are also some services developed for entire fleet or for entire company. I don't know what special design API. So we are building the solution around the customer need, and we develop for the customer. So we have custom development also inside. But day by day, we are working pay per month per vehicle. Yes.
And you mentioned so how do you prepare for potential disruptions and shifts in the technology landscape? Because you did mention the legislative changes that come, and that's understood. So you're also looking at what...
Not always understood, but
yes.
We are keeping an eye on it. And we are very much connected also with international players, and we follow the trends. We have also for connectivity. We have very good connection with all the environments, mobile network operator or MVNOs, mobile virtual network operators, in order to adapt. And also, of course, we have a very strong relationship with our hardware manufacturer. So being a worldwide manufacturer, he is able to gather all the trends from the entire world, so we have a very good cooperation with them.
Mm-hmm. Perfect. So thank you very much, Ovidiu and Aurelian. It was great to have this discussion. And now I will invite back on stage Voicu and Bogdan, and we are going to now do a more thorough Q&A following also the presentations from the other directors.
Thank you, and thank you all.
So, perfect. Any follow-ons after the presentations? Something you would like to add before we jump into the questions on what the colleagues from different departments delivered?
Well, definitely I would like a little bit to address what Gabriela said about integration. So it's a continual process. Imagine that there are 9 companies. And as you know, in time or even more, but I'm thinking on the last 2 years, and all of them run to a different process, from being a standalone to integrate different function, and then to add and integrate more, maybe to be you know, kind of moved completely to the main company. And of course, there are 2 different areas. One is the service side, which it proves to be easier from a certain perspective, and the product side, which for some reason they are difficult. And you saw already on a video there are 3 platforms. And 3 platforms require a lot of work, to be honest. And when we did the first acquisition, it was a SaaS group about 4 or 5 years ago. You know, we learned it hard way, to be honest, how to integrate those companies or to maintain them independent. And of course, there are huge savings here, to be honest, on platforms, on services, and how we address the market, because that's one of the key elements. And from now on, you know, we did it in our way, let's say the integration, but now with Gabriela, we analyze, we try to emphasize and to extract the maximum out of those integration. So that's one. I would like to add also the services area, and Aurelian mentioned pretty strong, you know, that one of the companies that we acquired, Future Workforce, it's a strong company in robot process automation, in artificial intelligence, and machine learning. So that's the acquisition that we did. Actually, after we invest with our vehicle, so AROBS has one vehicle, Cabrio Investment, that is specially designed for investing in startups. And we invested with a small amount of money about 4 years ago, and we did an interview with Zephyr Live exactly today, so I guess it was public.
Yes, it was.
So, and we started with investing small and the risk capital into that company, and then we moved to fully acquire that company because we saw as a big, creating big synergies with group. And I mean synergies between customers, of course, because they address a certain kind of customers, and we also address different kind of customers, as AROBS, I mean, that can, where we can add and leverage our capabilities on a multiple area. And I can give you one example, Sephora, you know, you name them, you know, where we started with the small RPA implementation, then we expand, and then we go globally, and so on. And plus, we plan to add the software services area, you know, on the top for different other departments, which is Sephora, it's a retail group. You are maybe all aware. But there are also others where we can create synergies. And believe it or not, in this industry, size does matter, you know, how we say. And that's really important because as big as you are, you can emphasize and create synergies and develop a strong also strong connection with the customer. Talking about Ovidiu, we were together at one of the biggest conference from the energy sector about ESG, and just believe the number, you know, because we are talking about 80,000 tons of CO2, and those, you know, monitoring this, it looks a lot like when we started 17 years ago, when no one monitored their vehicle, you know, and now we are monitor about 115,000 vehicles. But initially, no one knew where the car was. That's one. And it took a lot of struggle and experience in the last, especially in the first years. And imagine the first years were in the period of very hard recession, 2008. And we were able to convince the customer that through our solution, we were able to reduce cost and also emphasize and increase the connectivity and also the connectivity and the supervision of the vehicles and drivers and so on. So we are expecting something like this right now because that trend will never stop, you know, with the ESG and the CO2 and everything. And we have in pipeline many other products, to be honest, in that respect.
I see we have a question in the back of the room. If we could have a microphone for a video.
I'm Ovidiu from AlphaQuest. Thanks a lot for the presentation, first of all. So thank you for the presentation. At least from my side, it was very illuminating to see the complexity of the business and the fact that you were so dynamic and already think about integration. The sort of question or the more question within it relates to the M&A that you have in the pipeline. So we've been talking so far a lot about backward looking, wanting to open up for forward looking. So within this M&A plans, I guess there's the what, the when, and how much you're probably going to be spending on. So first of all, on the what you think you're buying, simply put, is it more towards buying people, i.e., employees or expanding the network, or adding to the product lines or to the client base that you have? So is it more like people or clientele that you're probably going to be focused on?
So I will start with when we start the strategy of acquisition. So we started during the pandemic, actually, or before, a little bit before. But then we accelerate that during the pandemic because what we saw is actually the customers, the existing customers are more important than new customers. And you know all the theory that you know how much it costs to lose a customer and to add a new one instead of maintaining an existing one. You know, it's easier to maintain an existing customer. But what we found is we were able to increase within the relation within the customer, the existing customer. So what we are looking for transaction, back to your question, was specifically acquiring customers. So we acquire customers, also the resources on the side, because there is a strong relation between customer and people that are delivering. And more than that, like we did with the pharmaceutical company, well, the company from the medical field with the connected devices, we are able to move to different verticals, you know, within the same company. And we are not talking about small companies, you know, like, you know, we are talking about companies doing billions, you know, in the top tiers in the US or in Switzerland or in other countries. So we are connected very well to those elements, and our acquisition target are mostly for customers. And of course, there is a particular type of customers because we already reject acquisition for companies that are mostly selling people. We are not in the business of selling people to the customer. We are more in the business to deliver solution to the customer, and not every solution, but innovative solution with a big R&D related to this. And we prove that we are able to deliver, the customers are happy, and that they recommend over and over, even to new companies or within the same company.
And in terms of sort of how much you're going to pay for those acquired, where in the cycle do you see the industry right now? So as of why now do you plan to have this significant pipeline of potential acquisitions? So where do you see yourself and the targets that you have right now in the cycle that entitles you to probably go ahead and make this move?
So, of course, we can talk about the Romanian market. Romanian market is very fragmented. You know, you cannot find, well, you barely can find a big player that is for sale in Romania for more than 1,000 people and more than, I would say, similar size like us. You know, and what we are doing right now, we consolidate the market. That's our plan for the Romanian market, to consolidate the market and get more companies on board together with us, emphasize the entrepreneurial spirit that the founder have it, and also the need for money, you know, because the entrepreneurs usually want to exit, but some entrepreneurs that we found out, they are really interested to a little cash out, still be in the company, you know, together within a bigger group, and cash out later on with the stock. That's what we put stock, you know, in our plan. About 25% of the shares are in stock. And I cannot explain, you know, on one of our first transactions that we did with Berg, for example, we were trying to convince the owner, you know, please stay with us, convince to get shares instead of cash. And, you know, the initial reaction was, okay, I might invest about 100,000 euro or whatever, you know. And now looking back for that entrepreneur, I can give a different kind of story, you know, because our shares from the moment of private placement and stock went up with, I don't know, beat the inflation definitely, with maybe 20% a year, 22% a year. So that gives a good indicator of the company's entrepreneurial company, that they want to be with us, cash out initially, and be enrolled together with us in a much bigger project. So that's one of the elements. Okay.
Thank you. Do we have other questions from the audience? We also have a set of questions from one of our analysts, also around the subject of the M&As, because as Ovidiu mentioned, the presentation was about the past, now we're looking into the future. And the question is somewhat similar. Can you be more specific about the areas, verticals that are on your M&A shopping list?
Yes, definitely. I guess that was Ovidiu, the other side of questions, you know. Also that we are looking to get stronger within the customer base. So for example, if you have a vertical of medical and we can enhance our expertise with some other companies doing that same verticals, we will proceed on them, for sure. Of course, it's a matter of EBITDA multiple. There are many things in align, you know, in that direction. So that's one. On the other side, we want to be closer to the customer. You know, we want to be higher on the food chain, like there is the name. You know, we want to be on the specific area where our customers are. For example, if the customers are in the US, we will be definitely in the US closer to customer, or in Western Europe, we'll be closer to them in those geographies, because then it allows us to capture more value. And we can capture more value in two ways, you know. And one is increasing what we deliver and charge more. And the other element is maybe more, you know, work with less expensive people and capture also the value. But we are not in the second one. We are more in the trying to capture more value, and because we are involved in the R&D projects and in development, continual development with the customers, I guess that's important.
And the related question is, which verticals will be strengthened organically? So are there any areas of the business where you do not plan to do M&As?
Well, it will be difficult, to say what we are not going to do. I will say that we are open. Of course, don't imagine that in all the M&A process, we don't say no to any company. So we are not. We definitely say no to multiple companies, because we didn't like the management, or we didn't like the customer base, or the culture, within the organization. And we also we are analyzing what Gabriela mentioned, about how cultural fit is a good fit, and where we are saving money or where we can add value on both. So that's actually.
How many companies did you look at in the last 2 years, since, let's say, the private placement? Or how many discussions were you, and what's the success rate?
We didn't evaluate like this, but I know that we created kind of internal document, what we look for on each transaction. We add more, things that we are look for, and what we disregard, and to learn lessons from each acquisition and transaction. And some of them looks amazing at the beginning, but then they are different. And of course, we try together with the lawyers that are involved usually to get to connect very well with this.
What was out of the acquisitions, what was the fastest or the nicest surprise in terms of the integration, where you found a team that very fast that you knew you did the right deal?
I would mention one from the product and one for the services. In the product area is CDS, I guess, that run extremely smoothly. The owner, actually from our first discussion about 4 years ago, the entrepreneurs wanted to be more connected with us, to see more how we are doing things, and that create very smooth the transition and the integration, And now the entrepreneur is on board, and he came with new ideas, with new business lines, with the potential development of our own product. So that one's extremely well. In the service side, well, that's difficult. In the service side, I would emphasize the Berg, the first transaction that we did, because it ran smoothly from the moment the previous owner was out, really. So you can imagine it took 3 months for the owner to decide what he wants to do. It proves to be the blocker in the development of the company. And then with the management was very aligned with ours, and they were able to integrate, I would say not immediately, but it took some time, but very smooth.
These are,
But I guess Aurelian has maybe others, and Ovidiu also other, but that's from definitely from my perspective.
There is a question regarding the return on equity that you are targeting for the deals. If you have this indicator for deals that you can assess if the deal was successful or not, and if it's the same for local, so Romanian deals, and for international deals.
I will let Bogdan to.
Our deals were local, even though they have some extensions abroad. So it's only
Except
one
Poland.
measure.
Except Poland, I guess.
Yeah, except Poland.
Yes.
And our expectation on the midterm for return on equity, it's 18 to 20%.
And how would you address the point that M&As outside of the CEE might further dilute the margins, at least in the short term? And that brings us to, let's say, a bigger topic that I think is important to address, related to the economies of M&A transactions. I mean, how does executing an M&A affect the profitability? Because 1 + 1 does not always equal 2 in case of M&As. And I think it's a good topic to elaborate also for investors, how you see it.
Well, for the beginning, we are focusing on Central and Eastern Europe. And we believe that there is a good pool of people that can grow and deliver very successful projects. We explore a little bit India, we explore some other geographies, we explore Indonesia. We are still going there, to see what's going on. On the other side, if you are approaching the Western European market or the US, then there it's mandatory to see how we can add value to the customer. Because usually the companies in Western Europe, and I returned from a discussion with one of the key customer in Germany, they said Romania is continually a best cost country for the cost reason. On the other side, they are looking for some other geographies like India, like Mexico, like, globally. And we need to be closer to them in order to understand the trends and how we can capitalize and maintain the margin what we offer. Because of course, when you go in the US, you might lose a little bit of margin because of higher cost and so on. So it is a learning experience. I cannot say that we have completely a rule, but we do target companies in the US and in UK and Western Europe in order to get higher on the food chain. So we'll charge more, very simple. That's the plan, to charge more, being closer to the customer, and of course to deliver value.
Mm-hmm. And now going to Bogdan, this is the question that also keeps coming up. Targeted EBITDA margin in the medium to, let's say, long term. Where would be the sweet spot that the investors could look at? Of course, we live in very turbulent times. Also, when it comes to the legislative or fiscal changes that impacts. But where do you think the sweet spot would be?
For the current business or for the M&A activity?
Overall, for both. I mean, current business plus the M&A activity that you have planned now that we announced at the transfer to the main market.
This will depend, of course, on the speed of the 3 pillars that I presented with the revenue streams, meaning software services, software products, and integrated systems, mainly on the greenfield. So, because they have different profitabilities, but keeping the same mix, we target at least to preserve the current profitability.
Mm-hmm. And now moving a little bit forward with the questions, because we touched different areas also looking at the questions from investors. Looking at the split between the product and the services, do you see any major changes to how they contribute to the turnover in the near future? Do you want to shift, for example, for the product to contribute more? How do you see this?
Well, the products usually generate higher margin. That's clear. But what is more important is the flexibility in the product, because you can stop from one day to another, maybe I exaggerate a little bit, the development, and then you stop the cost in that area in order to cash cow, on the product. So you have many options to play with the products, and we are not talking about Track GPS. We have another 6 or 7 products in our portfolio. So we have different life cycle for each product, and we try to balance all of them. Depends on where the market is, how is evolving, how is the needs in the product is higher or lower. For example, with the UCMS is a company that we acquire in the payroll and payment system. And many companies in Romania and many people have their payroll developed with those solutions. And for us, pandemic was a great growth on the request because there are many legislation changes, you know, and then that requires a lot of development, and then you can capitalize on a higher price to the customer and capture a bigger margin. You know, when there is not such a big demands on changes and requests and so on, then you can capture even a higher margin, you know, on the top because you don't have the expenses. So that's one element. It might be the other way around, you know. You can stop from one day to another the development and maintain and keep the product running on annual recurrent revenue, how we name it in the industry. There is a big indicator that we name in our product area ARR, annual recurrent revenue, and the churn rate. So there are two elements that we follow continually in order to see how we stay with the products and how we capture the margin.
Mm-hmm. And speaking about expenses, looking at the P&L, the personnel expenses are the largest have the largest contribution to the expenses. And Aurelian mentioned a little bit about the market, that the current context somehow helps. I mean, he mentioned he's a little bit optimistic in a sense that it will cool down also the market and from the employee's perspective. How do you see it? Do you see better times for the company when it looks at when it comes to the pressure from the salary side?
Well, that's a tough question because many in the audience, they are also people working in the company. So shareholders and employees. So, but I would say that what we try to do is to move the pressure from the seller, like we did in all the years, to the customer side. You know, and sometimes it's possible, sometimes not. We try to align always the performance and the value they deliver to the customer with how much we charge the customer. You know, and there is always a correlation of this. On the other side, we have different geographies and different area where we develop. For example, in Moldavia or in Poland or in Hungary, you know, we have different geographies where we can capture a bigger margin. Maybe because, I don't know, Poland looks fancier than Romania for some reason, you know, in front of customers, you know. So we are trying to play all this game, having a broader exposure you know, and capture a lot. And for example, that's why we are in the Netherlands and the UK, because UK, in UK there is not such a big pressure on price, but there is more pressure on how you deliver and when you deliver, and also these elements that are related to people involvement. But one of the key elements for us, and that's why we started the employee stock options plan, is that we want the extra mile. And every time we mention to our people that we want the extra mile because the customer is at the end the one who's paying the bills and who's, if you deliver the good performance, then of course you can raise the rates. If you're not, then it's a good element where you see how you are staying. And it's a good area when you see the improvement.
You mentioned the stock option plan, and I mean, I'm confident AROBS has the largest stock option plan implemented for the benefit of the employees. And here we mean different types of seniority in the company. Of course, there is a minimum time that the employees have to be within the company, but most of the companies, from my experience, apply it only at the level of board and somehow overpass the actual people who work. And then is it really truly a stock option plan for the employees? So I think you made a great example in this area also for other companies. And do you see this as an advantage for people to come to work for AROBS? I mean, is this a thing that's that you feel is start to being known in the market, that also employees now want to be rewarded for that extra mile, that they want to be part of the success, because it's still quite a new concept in Romania. Not many companies have, only actually foreign companies have implemented it that were listed on other stock exchanges. But in Romania, we haven't really seen it at such a big impact that could positively impact so many hundreds of people actually.
Definitely. That's how we started. We always, well, in the past years, even before the ESOP, we rewarded our colleagues financially for a good performance, and we use KPI and all the other instruments for managing those results. What we do actually with the stock options plan, we added a good element where each one of our colleagues can be rewarded based on the project performance, individual performance, or the group performance, the overall. And I guess that's a key element in how you grow a service company. Because we learn also that in time you need good connection with the customer, good connection with your people, and they are at the end delivering. And we are, as management, we are just, the front. We are the front in front of our customer. And our colleagues are the one delivering and working sometimes even night, or during the COVID, we sent people to different location in Italy, and we're not afraid to go there for saving a specific project, and that definitely, that's a sense of commitment. And that was a good example for our customer, that we can do many amazing things.
And before I again ask the audience if they have other questions, you mentioned a little bit when answering one of the questions regarding the fact that there aren't many large targets left in Romania. And the reason for that, of course, is there has been a lot of M&A acquisition, but where Romanian companies were actually being taken over rather than following your footsteps. And how do you see it? I mean, more critical approach. Do you see it? Has it been healthy for the market, the takeovers, the fact that the Romanian entrepreneurs, instead of, let's say, listing or looking for alternatives or joining forces, they actually sell the business? Or what's your take? Because this is not the journey that you have taken.
Well, swimming against the current was one of the key area that I experienced, I guess. So, of course, the flow is to, or at least the idea of an entrepreneur is to sell it. Or at least it was before AROBS went into the stock exchange. Now, what I want to see, it's more companies that were selling or entrepreneurs to invest more into the local ecosystem. And I'm really proud to see some of companies that sold their business to be now part of AROBS as investors. And I have few names in mind, but that's really, that means there is a side of the story that looks very appealing to the entrepreneurs. They sold their business and they want to contribute. And our plan is also to add more of those entrepreneurs and discuss with them, maybe to add to the advisory board, to connect them together with us in order to grow AROBS to, how I said, in past, to be the first unicorn from the service area coming from Romania. So that's the future. So that's how we want to grow.
And I think they have a great opportunity at the share capital increase to actually contribute with cash into the business, which I think is a very important aspect also, that you did raise capital from the market for the development and for further investments in the ecosystem. And I think it was seen also how, do you have an estimate how much the business grew in terms of people locally since you raised the money from the stock exchange? I mean, this growing business that you had, of course, internationally as well, but primarily in Romania, you mentioned, apart from AROBS Polska, is it, most of the acquisitions were locally. So how much more people were added on to your ecosystem?
Well, I guess was mentioned, about 600 people. We doubled.
In
We
1
doubled the
year, we
number.
doubled the number of
In 2 years. No, one?
No, 1 year.
1 year, we doubled the numbers, of course.
That's an incredible.
No, in 1 year. From 600,
11, you had 600 employees. Last year, you had 1,009 employees.
Mid-year last year, we had 643 employees.
I'm speaking end of year.
Okay, because at the end of the year, we added 2 more companies. It was AROBS Engineering, the former Enea, and also NorLogic.
Do we have questions from? Oh, we have also another question. Can we have the microphone? Thank you.
Regarding the fiscal changes that were declared constitutional yesterday, so can you estimate the impact on salary costs? I'm referring to the revocation of the exemption of the 10% tax on salaries income for IT employees with over 10,000 gross salary.
Our understanding after the ruling of the court is that this change in the fiscal treatment will apply from 1st of January next year. So it will be part of our budgeting exercise, because we have to balance, as Voicu mentioned, what we can achieve in terms of growth of rates with what we can offer to our colleagues in terms of increasing in the payroll.
Sorry, I didn't understand.
So the gross salary is not changing as of 1st of January. Any change means an increase in the gross salary voluntarily. We have the discussion with the customers to see how much we can pass to them. We also have the annual evaluation of the team, which also is coming with certain salary adjustments, and all of them will be reflected in the budget. So we don't take as granted the exemption neither to pass it to full to the company, neither to pass it to full to the employees.
But if it were to pass it in full to the company, what would be the value, the amount?
well, there is a mixture. You know, we did some
I
calculation.
made some calculations. I just want to check because I
Yeah,
don't have.
we saw that. I guess you mentioned. I would say that it's half that you mentioned. You know, maybe you said about 12,
13 million
13 million RON.
Yes.
You know, our calculation is lower. You know, I can say you
Well, that's
that
why
it's
I'm
not
asking, so
final.
I'm not
It's not
So
final.
if it's in full, we estimate it to be lower than your estimation.
About half. Okay. Thank you.
Perfect. Do you have other questions from the audience? If not, we're getting close to the conclusion. I have a question, Voicu, in one of your recent interviews, you were talking about difference between a dividend versus a growth company, and somehow a lot of expectations, I would say, sometimes come from misunderstanding what the company instinctively is. And I think in case of AROBS, this is definitely a growth story. And I think the investors who invest in AROBS are investing for growth. And maybe you can elaborate a little bit the strategy for the next few years and what will be the focus going forward.
Yeah, so as much as we have targets for acquisition and for development, and we maintain the innovation within our company, our plan is to continue to raise money in order to increase the company and the footprint of the company. So on the budget, you know, we estimate to be about 80 or 85 million euro to close the year. And we don't want to stop here. So our strategy is to acquire, to get money, and then to, I need to ask my colleagues to stop talking behind the wall, so I'm sorry, guys. So we need also to continue that growth because that's important, and our footprint is growing with, if we, for example, if we double next year, it can be possible. We can do it further, and we can bring more value to investor to growing the company and to continue growing in the model. We are not in the moment right now of capturing and create and becoming a dividend company. It might be possible in the future. I've been asked several times about getting and paying more, maybe get some dividend rates, but it's not for now the case.
Great. If there are no further questions, I think we can have a concluding remark and maybe a concluding message to the investors, looking at the end of the year and also what the next year has in plans as we look at it now, and of course the planned share capital increase that you've also presented first at the Bucharest Stock Exchange transfer event, where it was mentioned the strategy that encompasses approximately 55 million euro for M&As for the next 3 years, split 75% cash component, which would be raised from the market. So that's approximately 40 million euro. That is the target for the share capital increase. And then approximate value of 15 million euro in the shares. So a message for investors who are considering now AROBS either as enlarging their stake or participating in the share capital increase next year.
Yes, that's our goal, is to grow and to continue the growth in few areas where we have potential. We spot some verticals where we can use the capital in the most effective way, and for us to have investor closer to us, it's really important for what's next. So when we started about, I guess, 2 years ago, we sold to investors, I would say, the story of growth, and we are continuing this growth. And our plan, we'll present also to the market with the next year budget how we are going to invest the money. And of course, we'll use not only share capital increase, but we'll use like before. We can max out and Bogdan knows probably better, to get more loans or to pass it to make the bond emission in order to raise money to use all the instruments that are allowing us from being at the Bucharest Stock Exchange. So, we also have geographies, very interesting geographies where we can expand with the good knowledge, good people, where we can leverage either the cost or the value that we deliver to the customer. So we are working on both ends.
And also a message from the CFO. I remember we did a study once on asking investors what are the important aspects when they analyze company, and they actually mentioned the CFO, and the fact if the CFO is an investor is important because it means he understands also the other side of the table. And my first question, Bogdan, is if you are an investor as well. I guess obviously you are.
Yes, I am.
And what would you, from your point of view of the financial perspective, what would your message be for the investors going forward?
First of all, moving to the main market, it put us in the position to start reporting IFRS. So from the end of the year, we will only report under IFRS. That means that our results would be much easier comparable with other players from the region, from the internet, from other markets. And in this way, I think we can offer to the investors more visibility and a base to compare our performance with the industry. Also, we are working and we are trying to improve the clarity of the information we deliver to the market and to try to be as predictable as possible.
And to joke, you know, at the end, I would say our hashtag is we won't stop. You know, we let you know when we come to dividends, when we stop. So when you see the hashtag of now we stop, you know, then we will see dividends. So I guess that's how is making kind of a joke. How we'll signal the market that now we stop with the hashtag. Thank you.
Wonderful. Thank you so much. From our side, what I want to add is that I think investors appreciate AROBS story for sure looking at the liquidity which overpassed already a number of companies from the BET index on a market as still small as Bucharest is to actually have a retail base of 20% that is so actively trading on a daily basis is an important accomplishment. And I think this transparency, the openness, Voicu, I see you weekly in the media. You're, I think, one of the. I mean, I've known about you. I've known about you for the last decade, and you've been at the forefront of the IT sector in Romania. And I think investors really like the fact that they can diversify their portfolio with a company that's liquid, that's traded on the main market, that's transparent with the growth prospects, and of course that is on the radar of institutional investors, because there is an important aspect that maybe we don't talk about, is that the 2 years on the Aero were very important for getting the financials, like the whole structure, because I think not many investors understand the extent of the business and the growth, because one thing is to have a big business and the other thing is to double the number of team, as we said, within a year. It's a massive effort. So here a big kudos also to Bogdan, because he handled the whole process of transferring to the main market, the IFRS transition, which was a big effort. But of course now at the size which the company has right now of over almost 200 million euro or dollars, it is an investable company. And I think this is a very important message for any investor, is that this is a liquid stock. This is a stock that still has growth potential. And actually there is not that many opportunities in Romania to invest in issuers that meet those two criteria, and on top of it, add this diversification, which is very much needed. So thank you all very much for joining us. For those of you who are following us online, thank you for keeping up with us for 2 hours and a half. We hope it was useful. And for those of you in the room, we invite you for some drinks and post-formal conference discussions outside. Thank you so much.
Yes, thank you very much. And I want to assure that no confidential information will be passed to the existing investor, you know, just to keep the, you know, also on the important side. But we welcome any investor to come also in person to such event. And being the first one, I'm really impressed by the presence. So thank you very much for being here. And many thanks to AROBS team that it's also present here, to the member of Consiliul de Administrație, and also for other members that are in the room together with us. Thank you.